Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, June the 23rd, the year's 2021. Let's talk trading. Your thoughts when in a trade, part 2 with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, on Monday, I did a video, your thoughts when entering a trade, and today, or yesterday, yesterday, Tuesday, I did a video, your thoughts when in a trade, and then actually the next one's going to be your thoughts when exiting a trade. So, in a trade, Walmall, what are your thoughts?
Well, once I'm in the trade, it's more of, okay, usually, well, actually, can we start that a little bit differently and say, what are my thoughts before I get into the trade?
Okay, so before you get in a trade, what are your thoughts?
My thoughts are, okay, am I at the point where I have a trigger coming along? Okay, and I start writing down, okay, I'm one of these old school people. I got to write everything down. Good grief. Sorry about that. I don't know if you heard that or not, but I had an alarm go off on my phone. But, I'm one of these old school type people that when I go and, sit down to enter a trade or whatever, I always write things down on a piece of paper. Actually, I've actually come into the 20th century, and now I write down on a grease board in front of me. But I write all the different things down. I want to know, for instance, what was the high from last hour? What was the low from last hour? And I start thinking about that, and I start thinking about, does a Walmal trade make sense this hour? I don't like to go and blindly just enter a trade just because I get a trigger. So I'm thinking about, all the things that matter. And I may say, you know what, entering a Walmal trade may not make sense because, there's some type of whatever that happened when I look left on the chart. But I also think about it from the other perspective, and is that, if that's a particular wall that's there, and, it's been something that's been rather insurmountable, I also start thinking about, hey, you know what, if it does get breached, it usually is going to breach it for a big, a big number. So let's say, like for instance, on my chart anyway, the long would have been at 70 and the short would have been at 60, and, it's the type of thing where I look left and I go and say, it ran up last hour up to 75 and turned right around. So that would tell me, hey, if I get a breach of that 70 line, I need to go and realize that 75, for whatever reason, it held pretty strongly because it didn't just come off that line. I mean, it screeched off of it. So it's sort of like, that's to me, that's something I got to be careful of. So I'm thinking about, what are all those different points of inflection? I know that's a term that you like to use as points of inflection. Where are those places where the market likes to turn around? Where are those places where the market generally has some trouble? And I start writing those things down so that it's just top of mind, and if you're more of a, millennial or Gen Z or, or whatever, you may want to go and use, for instance, my notes, good grief, indicator. That may be a better way to do it. So that way it's right on your chart. That way you don't even have to take your eyes off the chart. It's right there. But for me, I'm one of these people I'm kinetic. I got to go and actually physically write it down. And usually when I write it down like that and I do it that way, it's actually, I've got it memorized at that point. Hey, there's going to be a problem here, But all that said, if it does go and breach it, and I know, there's a good chance, well, I'll tell you what, I may go and say, instead of going and taking my taking the trade at 70, or if I do take the trade at 70, have my finger on that exit button once it starts getting close to that 73 to 75 area, and just know that it may reverse off of that, and just go and jump out real quick, and maybe that way I'll pick up 1 or 2, maybe even 3 pips if it turns around at that same place. But at the same time, also look at, hey, if it breaches this line, hey, I may want to go and stack on, and so I'm thinking about all those different possibilities. It's one of those things that, we've talked about sports on this channel a lot. When you're doing sports, what do? You're trying to go and visualize what are all the different things that could happen, and that way you've got it already in your mind that this is what I'm going to do. If X happens, I'm going to do A or B or C, whatever it may be. And I think in trading, we need to be able to do that, be prepared for that. So that's what I'm thinking about before I even enter a trade.
Well, how about this? Do you ever enter a trade thinking that you're going to lose?
No. It would be stupid, wouldn't it? But seriously, no, I don't go into a trade thinking I'm going to lose. Now, I may go and get into a trade, and as soon as I get into the trade, say, oh, crap, I'm going to lose. That may happen, but, no, I don't, I'm not going to push the button. Just, to me, that's foolishness. Why would you go and take that risk of something that you don't believe has got a possibility of winning? Now, I may go and take different trades where I say, hey, based on what I've seen in the past statistically, this has a better chance of being a better trade for me. Or another way of looking at it is, hey, this is a trade that, hey, statistically, I may have a better opportunity here for making more pips. As an example, we're 18, 20 minutes into the hour right now. It's 11 o'clock hour. Generally speaking, I don't like to take Walmal trades at this time of day, but I will do it. But last hour was 38 pips. What that tells me is that, hey, I got two reasons why this hour may not move as far as it generally would move. One, because we had a big movement on the last hour, and a lot of times you get big movement, especially this time of day. You don't get as big a movement on the next hour. You may get a little bit, a candle that's a little bit compressed, and now we've already moved 9 pips. I'd be a little bit wary about going and taking a trade and expecting to get, 5, 10, 15 pips on this. That's not going to preclude me from not taking a trade. It's just going to go and say, hey, watch it, fella. Make sure that you're paying attention and you're staying on top of the trade.
Right. But
I don't know if I answered your question or not.
Well, the thing is that, it's like, of course, when you enter a trade, you really think you're going to win. But what happens, though, is you enter that trade and immediately, you're down 2 pips. I mean, now it's like,
oh, yeah.
What thoughts do you now have?
Yeah. Well, I'll give you an example. In fact, I used some when you called a few minutes ago. I said, give me a second here. I got to get out of this trade. And what happened was I had gotten into a trade, and it looked like a good trade. It looked like there was nothing wrong with the trade. But as soon as I went and hit the button, the buy button, what happened was all of a sudden my spread went from 0.2 to 1.5 out of nowhere. Just bam. So and I'm sitting here with a commission, of 0.7. So now I'm sitting there basically having to make up 2.5 pips, almost 2.5 pips, before I can even do anything. And when you're only looking on a trade that I was taking at that time, I'm only trying to make 2.5 to 5 pips. That's half my profit possibility there. And it's sort of like, I guess the first thing that comes in your mind is like, oh, what did I get myself into this time, dude? How am I going to get myself out of this? And you start thinking along the lines of, what can I do? What can I do to go and minimize the potential loss here? And we've talked about this a lot, over the last year and a half or so, and that is that once you're in a trade, there really is only a couple things you can do. You can stay in the trade, you can get out of the trade, or you can go and add into the trade. Those are really your only possibilities. And when I say add into the trade, you can maybe even take, some people like to go and say, hey, this is going against me. I still kind of like the trade, but I'm going to try and minimize my loss. Let's say I went in with a 4-lot, trade. I can go and take 2 lots of it off the table. That way I'm just going to take this 2-lot loss right now and hope that it comes back. But really, those are your only possibilities that you have. So you start looking at the chart and start saying, what am I going to do? Should I really still be in this trade? And that's what I start to do is I start looking at, is this a trade I really should still be in? Or is this, we need to go and, as they say, exit stage left, get off the stage, preserve capital. That's my number one rule, preserve capital at all costs. Well, if I can do that, and it means I take a small loss here, it gives me some gunpowder later on to go make up that small loss. So at least that's how I start thinking about it.
Yeah.
On the other hand,
well, hold on though.
Go ahead.
You were saying that you have to decide whether or not you should still be in the trade. What's your criteria for staying versus exiting?
Well, what was the reason I entered the trade? For instance, if I'm taking a DSR trade, and I waited for my weight candle to come along, and I got, let's say we're looking for a long, I got my white 5-minute, up candle, and then I the next candle went, and my general way of doing it, as soon as I get a white weight candle, I immediately go and jump in long. Okay, and all of a sudden it goes and bounces against me. It doesn't even go up a single point in my direction. Okay, now I'm starting to say, okay, is the reason for entering this trade still there? You know, and if the reason for entering the trade is not there, it's going against me, well, maybe it's just time to go and exit. But at the same time, I may say, you know what, the reason for entering a trade is, you know, it's still there, but it's, you know, but it's not as strong as it was. Well, then I'm going to probably wait it out. I don't know, is that clear or not?
Well, I'm looking at the M5 chart right now. We had a 3-ball 2 M5s ago, and then we had the weight candle, which was an inside bar, and now price has broken the high, and it's kind of hesitating right around the H1 open. So it's like,
right.
If you were in this trade, you might be about break even right now. It's like, do you stick thinking that price is going to go up, or do you say, you know what, I'll just scratch this trade and wait for a better trade down the road?
Yeah, I probably would stay in this trade right now because I do have that M5. I've got M1, M5, M15 all in my direction. I am battling against the H1 candle, but it's, you know, it's relatively early in the hour, so there's a good chance that it's going to continue going up. So I probably would stay in this trade and wait it out, but I would also have a type stop, and, you know, my entry would have been somewhere around 64.4, and I probably would have my stop loss right at the top, you know, of what I guess that would be, I'm looking at a chart right now, about, you know, 61.4. So I'd have a stop loss, a tight stop loss of, you know, about 2.9 pips, you know, and I take the chance. I'd also take this chance also at this time of day because I've more than made, you know, twice what my daily goal is. So I'm willing to go and take a small loss here because I got some room to go and play it just to go and see. You know, if this was one of the first trades in the day and I hadn't made my pip shift for the day, I probably would have jumped out and just, you know, said, okay, it's not worth it. See, right now I'd be right back at my entry price. I'm pretty close to my entry price, and so now I'm starting to say, it may be time to exit out of this trade. You know, the other reality is that, you know, while I was in that trade, I would have been up from where my entry point would have been. I would have been up 2 pips. You know, at this time of day, I probably would have taken the pips off the table. Early in the day, I wouldn't have taken the pips off the table. And so you have a lot of those factors that come into mind, you know, come into play. And, you know, and are these hard rules? I wouldn't even call them rules. They're just things that they just do. And I think, you know, that's part of that experience thing, too, is that you just know that, you know, this is a good chance that this is going to continue going up. Now that you know, that last 5-minute candle, it closed white, but it also closed below the midpoint of itself. Its own midpoint, that's telling something that, hey, this thing is starting to turn around. You know, so if I'm still in the trade, I'm going to sit here and look. And, you know, and if it certainly gets down to, you know, gets back down to, you know, where I'm down to 2 pips, I'm definitely out of the trade. But, you know, I'd probably, at this time of day, I would probably wait it out and, you know, and see what happens. So, we'll see what happens here with this, you know, fictitious trade that I didn't take.
Well,
but we'll see.
So, you know, the thing is now, on the other hand, you know, if you're up like 2, 3, 4 pips, and then price starts going against you, I mean, you know, once again, it's these thoughts. It's like, do you go, well, shoot, I want my 2 pips back, or do you say, right, you know what, I'm just going to take these 2 pips and be done?
Yeah, and you know me, I tend to go and take my 2 pips very, very quickly. And that's what I was saying earlier, I would have been up 2.3 and I probably would have gotten out, because when it went up, if you look at the last 5-minute candle, it went up there and it put that high in there and it sat there for about, you know, 10 seconds, 15 seconds and didn't move one way or the other.
Yeah,
you know,
and speaking of which, it's time for us to get out because the fastest 15 minutes in trading is just about up.
Wow.
So, fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.